you're looking at the pound dollar on the 60-minute time frame, and I've only just got in this trade just in time actually, because I was out for lunch. So it is a head and shoulders, and the way it looks is we've got to move lower, we've got to pull back, then a move lower, then we make an initial structure high. So this high is higher than this high, and I've then used an aggressive entry into the right shoulder. I've actually used a flag pattern on the 5-minute. I will show you all of this once we do the higher time frame analysis. And here we are then on the daily time frame. Now, bigger picture here is we can look for shorting opportunities. What we did here is we then broke below, but what we did is we then double bottomed here and broke above. So depending on your rules for trading, you can either look for a shorting opportunity. Personally, I wouldn't because of this double bottom, or we can look at the market coming up a little bit higher, maybe up to this level, or even if we put a trend line in here, maybe up to something like that. Not very definitive, so nothing I can really take too much weight away based on this. Here on the 240 though, what we had is, I'll just delete everything off. Okay, so we had a move higher, retracement, move higher, we broke structure, a retracement, a move higher, and a retracement. So you could be looking for long opportunities anywhere in this huge outside return. The question is, where do you look for it? Well, to do that then we need to look at structure on the lower time frame. So let's go down to the 60. Okay, now this right here, I'm not too sure if you can see it. I know I've got a lot of lines on here. This was a triangle, and last week I was 50-50 about getting involved, only because the size of this pole, typically you don't see many of these trades, but we rallied up to the 127 fib, it got hit and we pulled back. Where did we pull back to? We pulled back to this consolidation area. And these consolidations areas are very high probability trades to get involved with, but what they are as well is great structure areas. And if I just highlight the very lows of the wick, then you can see we've come down into structure. So we had quite a nice bearish run, we had a pullback, which is what we need for the left shoulder. Then we had a new low giving us the head. Then we made the initial structure high, and then we saw the pullback and we held structure. Look here. Now as I drop down to the 15, I'm just going to bring back on these orders because we're getting close to targets here. This happened very quick. Oh, wrong one. Okay, so right, there we go. So as we pull down to this area and I saw this wick here on the 15, I thought to myself, well, it's not a double bottom I can enter, but is there the potential here to drop down another time frame and get involved? And here on the 5-minute we do have that entry reason. So I'm going to have to fatten this up a little bit. Okay, and that entry reason looks like this. It looks like a flag pattern. So you can see we had a touch, a touch, a touch, and a touch. And as you know, flag patterns, they're breakout patterns. We tend to see a rally, a breakout of the trend line, and that's exactly what we're doing here. Now, if we throw on some fib ratios as well, and you guys that follow me know by now that I love my fibs, when it comes into that 61.8 fib, that is what I absolutely love, and that is exactly what has happened here. And what that means then is that playing for this head and shoulder, I use that as the entry obviously, but playing for the head and shoulders, I can play for an AB equals CD pattern. So that AB equals CD pattern looks like this. Let's just draw it out properly. Okay, from the swing low to the swing high, up to there. We duplicate it. We have an AB equals CD pattern coming in right at this psychological number 12900 right there, and so that will be my first targets, and secondary targets are going to be for a retest of well, not even the highs, to be honest with you. So that's the trade. fingers crossed we can get up here and hit those targets. In actual fact, I'm just going to give this a minute. Let's just give it a minute. Let's see if we get up there and get filled. I'm actually just going to go ahead here and share this with the Tier 1 syndicate. I'll pause this video. No, actually I won't, because it looks like we're just about to hit for 37 pips. The risk on this trade was 24. 37 was the reward, so we've just hit those now. That's fantastic. I'm going to go ahead here and roll a few pips past break even. We will be holding 4 secondary targets up here at 119. And we're back for the final update on this trade, and let's just see if we can zoom in here and take a closer look. So we had the AB equals CD pattern. We put in a new high here, but then we've just been stopped out here for secondary positions. A real shame, but nevertheless, target one's hit there for plus 37 pips. Of course, we only bank half of that, but nevertheless, lovely trade there within 8 minutes. Got back just in time for plus 37.